NYAB published its Q4 report today, and here with me is company CEO Johan Larsson. Welcome, Johan.
Thank you, Aapeli.
So, if we start with the past quarter, you had to lower your guidance late last year due to the extreme weather conditions, but on the other hand, the cash flow was at a very strong level. But how would the CEO summarize the past quarter?
Q4 takeaways, in my opinion, of course, is a record high backlog when we leave the year behind us. A very strong cash flow for the quarter, amounting to approximately 17 million euros. And a decent profitability of EBIT 7.5. And of course, in these macroeconomic circumstances and extreme weather and early winter, and due to our strong seasonality, more significant than most others, due to our high presence up in the north and vast volumes, we managed an extremely challenging year very good. And I'm very happy to put 2023 behind us, because there are bigger and smaller headwinds, but mainly headwinds. So, but still, I have to be more than pleased with the NYAB employees' performance. So we have handled ourselves well, and to me, it says a lot about our favorable position in the market, NYAB as a total, that we can manage it like this. If you put it down to details or whatever metric you want to measure it in, only thing we really take a hit on is our EBIT level. And it's still, industry-wise, quite a good EBIT level. But everything else is more than okay. So, yeah, that's like my takeaway from Q4.
Yeah. Then if we look at this year, you didn't give a numerical guidance, but you're expecting your revenue and operating profit to increase from 2023.
Yeah.
Could you give a little bit more color on what to expect given this quite broad verbal guidance?
Yeah. First of all, it's the reason why we leave numeric guidance behind us is like a preparation for a future in a Swedish environment. Also, it makes a lot of sense in a business like this, where you have a lot of uncertainties and are exposed to everything from weather to currencies and interest rates and all sort of things. It's more logic to compare ourselves and our own performance with our own performance the same period last year. So that's the background. Worth mentioning, of course, or to give some color to it, is that as we state in the financial statement for 2023, it is with NYAB measure a quite modest growth, to grow with 16.6% in constant currencies. And of course, if the market conditions are better, we most likely will grow more. Because one thing related to this that we must take into consideration is that we have 10 straight years of profitable growth. And key, of course, when you have a scalable business model like ours, year by year, we can't grow with increased risk. It would be very stupid. So when there are uncertainties in the market, the smartest thing we can do is to take it a little bit more easy and accept that, okay, this year growth weren't what it been historical. If you look at the last 10 years, our CAGR is 49% annually. So that's, of course, that's on a lower level and not totally applicable to now, but it says a bit about us at least. So,
yeah.
Give me a follow-up question, because I got why there in my answer.
Maybe if we look at the current demand situation? You said in the report that you have noticed improvement in all your market areas, and you also reported the record high year-end order backlog.
Yeah.
What was also supported by the big projects regarding building the Aurora line and the Utajärvi solar park.
Yeah.
But how do you see the demand situation currently? Is it how much is it improving, and how strong is the improvement?
Yeah, I would say that for what we can see now, it might be like short term. We don't know that it will stabilize fully and totally, but now we see a fully normalized market. It's like back to 2021 and the 10 years prior to that. So it looks very stable. We have a good both order intake. A few of these orders been announced through press releases, and a couple of orders not. And there are a lot of bid tenders, questions out there, and they lead to contracts. So I would say that to a large extent, the market as a whole is fully recovered. It's normal and functioning now, and that's like slowly it's been developing that way since central banks paused their raising interest rates.
Yeah.
So unless something unexpected happens with the inflation, I truly and strongly believe that we have a stabilized market, and it will be quite good market conditions for 2024. So yeah, there are reasons to be positive, but we're not quite there yet. So
yes, understood. Maybe one question relating to the energy market. Have you seen any improvement in the wind power? Solar power is picking up, but how is the wind power market?
And not in the way that they start to execute on projects, but improvements in the way that they are looking at it, planning for it, and it looks like it will pick up from what you can see now from like coming fall, Q3, Q4, something like that. That's what it looks like now. But of course, that also depended on two important factors: interest rates and energy prices. If they move the wrong way, that will change, of course. But
yes, so we have to wait and see what happens. But if we move to the more bigger picture, you also released new strategic plans for 2024 to 2026. Would you briefly go over the main points of those four strategical pillars you published?
Yeah. First and foremost, people first. NYAB's only competitive advantage is our people. We have a very skilled employees in both Finland and Sweden. That is, of course, the most important reason why we can handle a tough year like 2023 in the way we did. So with that said, to give a little flesh to the bone, I would say that focus on strengthening like the NYAB culture is important since we are growing, getting more corporate, has to be a little bit less entrepreneurial and so on. And make sure that we are a preferred workplace when it comes to talent acquisition, people development, retention, and employer branding. Highly important to handle our growth. And of course, safety and security. Make sure that we prevent accident in the workplace. It's we have to in every way show that the people is our most important asset.
Yeah. Maybe regarding those, you also stated that you have decided to initiate a strategic review of your minority shareholdings, such as Skarta Energy.
Yeah.
So could you elaborate a little bit on the decision behind this, and when we can hear more about the outcome of these decisions?
Yeah, sure. The review is ongoing, and of course, if you start a review, there is a reason for starting that review. And the key question is, of course, that it's like for NYAB, it's a quite alien business model. It could be some potential conflicts with our clients and customers and so on. So we just have to decide if this is like a suitable business for us to be long-term owners or not. So that's like the main thing. And we're not really clear about that yet. But there are all reason to question if that business model is something for us. It's an excellent business model for certain types of companies, but not necessarily for ours. And viewers should bear in mind that Skarta Energy was founded not as a company to produce energy, but to build a pipeline and sell asset in an earlier stage. So that's the reason why. And of course, we like to be in control, and we have a minority stake in the joint venture as well. So that also has an effect. But I think that we will shortly we will land in our view and take on this long term, and then we will act accordingly. Whether it's staying as a 40% owner or diluting or selling or whatever, we'll see what we end up with.
Yeah. Then about the M&A, which is still part of your strategy. Last year went without any acquisitions, but how is the market looking right now? And could you maybe describe a little bit deeper what kind of businesses you are looking for?
Yeah, I will try. It's hard for many businesses that are very different could hypothetically be a fit. But yeah, first of all, now that the market has stabilized, since we don't want to increase our risk, grow with a steady pace organically, we don't want to do M&As, of course, either, that increases our risks. And when the market conditions has been so unstable, it has added risks in all like M&A activities possible. So I would say that is the main reason why we didn't do any during 2023. But of course, now when the outlook is more certain, it looks more stable, it's more likely. And it could be everything from niche specialized tuck-ins of a smaller size, of course, or larger ones. What I do think would be appropriate for us as a fit would be some sort of business that has a little less seasonality and a little less business risk in investor size, at least, where we have an even steady cash flow over time. So it could be that, but then we also have like what our key expertise with our industrial skill, as we have handled the reverse takeover and the acquisition of Powerforce and so on. So if the markets are good and stable, those are more preferable. If there are more uncertainties, we lean towards the other sort of M&As. But it's an ongoing activity, but we are pick and choose it. So the goal is still the same. We aim at 1 to 3, and if market circumstances makes it that we believe that 0 is better, we will do 0. But still, we aim to do a couple of M&As during this year also.
Yeah, let's wait and see if there is some good fits for you.
Yeah.
At the same time as you released those strategic plans, you also revised your long-term financial targets and lower your growth and profitability targets, which at least to me came as a surprise given you released previous target in June 23. So could you elaborate a little bit more about these decisions and relate to this? Have there been changes in your longer term outlook?
Not really. I would say that how we view our long-term financial goals is more like in a normal year with okay macroeconomic circumstances and so on, we should reach every goal, and every goal is in the terms of exceeds more than or less than. So there is not like not a roof. I would say that it's just a change of communication. It's somewhat related to how we change our guidance and adapting it for a future as a Stockholm listed company, which is most likely and what we have announced. So, yeah.
So you can put it that way that you are quite confident that you can reach those targets on a yearly basis.
I would say that for a year like this, we are in a very, very favorable position to reach them. But of course, if inflation numbers goes up and interest rate goes up again from central banks and so on, it will be tougher. But as it looks for now, a stable year, yes, we are in a very good position to reach them. Of course, there is high demand on the market. There has only been 2 months of this year. We have a good order intake. There are a lot of activity on the market, and there are deals being struck. So yes, it feels very good.
Okay.
Yeah.
Then maybe about the listing and re-domiciliation to Sweden. How are the things progressing?
Yeah. They are according to plan, and what I can say and promise is that shortly there will be more detailed information in this matter.
Okay. Maybe lastly, to put all together, what are the main themes NYAB is focusing on in 2024?
Yeah, since we are the company we're a bit boring, but it's like continuously, it's an overall development. The company should develop annually, nothing different this year. Of course, what's extraordinary is that we in the cards have a re-domiciliation, a possible delisting, and a possible listing. And that, of course, is a focus. But I would say that if the market remains stable, it's, of course, to improve our earnings, since everything else is at an okay level. And for us, 5.4% EBIT, which for many that are viewed as our peers are quite a good year, it's not good. It's weak, but it's understandable, of course, due to the market conditions in 2023. So I would say that there will be a focus on improving the earnings. And the way you reach them is through these 4 strategic pillars in our strategy plan, with people first. And to get back to that question earlier, when I put some more flesh to the bone on people first, the other strategic pillars that are responsibility to customers and society, it's operational excellence, and it's profitable growth. So all of this really aligns with the continuous overall development of the company and to improve our margin.
Yeah. Thank you, Johan, for the interview, and good luck for the 2024.
Thank you very much, Aapeli.